number 9, what is asset allocation? So asset allocation is not dissimilar from diversification. They sort of, you might say in some ways they're the same thing, but they sort of work together, I think. Asset allocation is more about spreading your risk over different assets, number one. So don't be all in stocks. You might be in stocks, you might be in bonds, you might be in real estate, you might be in gold, maybe you got a little bit in Bitcoin or other, altcoins, some crypto. You might have your money in alternatives like oil wells if you want to do something like that, notes, who knows. There's a variety of asset classes that you can invest in. And that's different than sectors within an asset. Like within stocks, you could have growth stocks, high-tech growth, blue chips, industrials, value, small cap, medium cap, large cap. We kind of break up any particular asset in a variety of things. In real estate, you can have single family, multifamily, commercial, industrial, land. In commodities, you could have gold, silver, other metals like, I don't know, copper, zinc. You could have mineral rights on land. So some of the asset classes overlap a little bit, like mineral rights. A land purchase for mineral rights is a perfect example of kind of a blended asset class of real estate and mineral rights. So asset allocation, one is about risk diversification, but it's also potentially about diversification of equity growth versus income in your portfolio. So as you get older, when you're young, you just want to grow your money. You're going to be working all the time, right? So you might have a certain asset allocation that is very higher risk and focused on growing your investable capital. As you get older, you get towards retirement, you're like, okay, one, I can't lose the money that I have, so my risk tolerance has gone down. But also, I need my money to give me spendable money because either I want to work less or I'm going to stop working, I'm going to retire. And I'm not just going to spend my pot of money. I want to invest my money now in the type of assets that produce spendable cash. So that might be dividend stocks. It could be notes. If you want to go low risk, it could be treasuries, corporate bonds, municipal bonds. It could be anything that produces cash flow. So you can look at your asset allocation that way. Am I allocated more towards cash flow in dividends or more strictly towards equity growth? And if I might be somewhere in the middle, or I might be like, I'm kind of equity growth, but I don't want to be super high risk, so I'm going like, value or something. So it's like asset allocation both serves for that person, but by looking at your asset allocation, you're de facto potentially diversifying and also spreading your risk. So there you go. That is asset allocation.